According to the American Farm Bureau, in 2017, China imported $19.5 billion of U.S. farm commodities, mainly soybeans, dairy, sorghum, and pork. In 2018, that number plummeted to $9.1 billion. And the downward trend is continuing into this year with an ongoing trade war giving other countries the chance to take the United States' place in filling those ag needs. Earlier this week, I spoke with UNL agricultural economics professor Dr. Wes Peterson about where things stand right now with China and what trade opportunities are still available for producers.
This is fluid. It's a moving target. It changes all the time. Whatever I say at this point will probably be wrong in 3 days. So it's a very tough thing to keep up on. We started a trade war in 2018 with a lot of countries, but predominantly with China. And throughout 2018, the Trump administration continued to escalate the trade war and put on more tariffs. China retaliated by putting on 15% tariffs on most of the, quite a lot of U.S. agricultural imports. A few weeks ago, the Trump administration threatened to put on more tariffs beginning in September. And China, you know, whenever you get in a trade war, the other side's going to retaliate some way. So China did a couple of things. The first thing it did was it said that they were not going to buy any more agricultural goods. What happened subsequently was that Trump realized that this might hit a lot of toys at Christmas and stuff like that. And so he put off the tariff increase that was scheduled for September 1st to December. But I haven't seen the Chinese say that they're going to back off. So that's kind of the situation. We don't know whether China will go back into the market and start buying more agricultural goods because the tariffs have been put off, or whether they'll say, no, we're going to stick with our guns here. But whatever the case, in the first half of 2019, U.S. agricultural exports to China were down about 21% compared to the first half of 2018. And the first half of 2018 was down very substantially compared to 2017 and 2016 and so on. So if they don't buy anything else the rest of this year, we will have, you know, as opposed to somewhere around 20 billion in agricultural exports that we used to do, we may only have 5 or 6 billion.
And a lot of this, we always hear about soybean producers are the ones who are really taking it on the chin with this trade war. So could you give us a sense of how this is specifically impacting Nebraska agriculture and the Nebraska producer, not only in terms of soybeans, but other markets as well?
Yeah, one of the things that makes all of this stuff very, very complicated is that there's a trade war with tariffs and so on and so forth that has an impact, but there are other things going on, as we all know. If China does not buy any more soybeans from the U.S., well, that adds on. I mean, it goes in the other direction. It would be price depressing, whereas if you have a shortage in supply, that would increase the prices. So how those two things will weigh out will be significant. But of course, even if your prices have gone up because of a shortfall due to the weather, if you don't have any soybeans to sell, then you know that doesn't make any difference for you, right? So,
right.
I think that there's a lot of uncertainty, and the China problem just adds to that uncertainty.
Okay, so I don't know that Donald Trump watches this show. If he doesn't, he should. But I don't know if he does. But in the off chance he is watching, if you had Donald Trump's ear, what would you tell him?
Well, I think I'm a trade economist. I believe in free markets and free trade and so on and so forth. I would tell him that the idea that you can win a trade war is wrong. It's incorrect. Everybody loses from a trade war, as we are seeing at this stage. It's very interesting to note that since the trade war started, our overall trade deficit has gotten bigger. Our trade deficit with China has gotten bigger, so it's doing exactly the opposite of what he says he thinks it would be doing. So I would say, you know, stop the trade war would be the first thing that you should do. The second thing would be to go back and contact the countries that the other partners that we had in the Trans-Pacific Partnership. You know, that all of the others have gone ahead and made an agreement, and they are going forward with a trade agreement among those absent the United States. We ought to go to them hat in hand and ask them to let us back in on that, because that would have done a whole lot for our beef exports, for example, because it would have opened up the Japanese market quite substantially.
So if we take China out of the equation, what are some export opportunities for Nebraska producers currently or down the road?
Well, there are, I think, a lot of others. Again, one of the things that would have been useful to do would be to be in something like the Trans-Pacific Partnership, where we could have perhaps, that included Vietnam. Vietnam is likely going to be an interesting market. The TPP did not include Indonesia, I believe. Indonesia is the fourth largest country in the world. They consume huge amounts of soybeans as tofu, right? They don't feed livestock all that much, and they certainly don't eat pork because they're a Muslim country. So maybe, edible markets, edible soybean markets would be something that could be. That's probably a little bit longer term. Short term, I think Brazil will be selling more soybeans to China. We'll be selling less.
Yeah.
But that means that Brazil will be selling fewer soybeans to other countries where it used to trade, so that opens up some possible markets there for the United States as well. And I'm not sure exactly what those are, but I think Asia is sort of the biggest actor. Japan, South Korea, Indonesia, Vietnam, Thailand. These are growing economies, and they've got lots and lots of people.